But the coin that I added to the portfolio today is called vEmpire.
And they are the largest decentralized metaverse investment organization in the world.
Hello, everybody, and what a lovely day it is. Let you kick off, and I'll do some button tapping in the background. You know what comes after Roby and Qcoin? When Binance. Hello, everybody. It automatically unmuted me then. Oh, you joined at the same time. That's unexpected. It's never happened.
How are you, Dom? How are you?
I've been thrown off. Not bad. I just switched Bloomberg on to catch up and see where the markets are.
Yeah, same. It's not looking good.
Could be worse. Expected worse anyway. Dead cat bounce.
Yeah. I guess this is what this episode of the Bold CEO show is about, isn't it? It's the bottom in. What's happening around the macro. First of all, do you think is the bottom in?
Definitely not. I'm trying to find some. I added some really doom and gloom charts. I often save stuff and then I forget that I've saved it, and then so I'm trying to find it in my photos. There was one.
Is that one of the crazy triangles that you like to draw?
No, this one was. It wasn't my chart, but it was like it was some sort of oscillation. Ooh, the Nasdaq's tanking. There was some sort of oscillation graph. Tell you what, it's on my phone. What I'm trying to do is get my photos up via my Mac, but I'm not sure if it transfers over. But
if you have iCloud activated, you should be able to, but sometimes that just doesn't work.
I found it. Now I need to hope that my settings are on where I actually can
share your screen,
just so everybody can see all of this this doom. But yeah, so for those who are joining us for the first time today, this is our second macro update. To be honest, I reckon I was pretty bang on from the last one in terms of what happened since. When was our last one? 3 weeks ago?
I think so. Yeah, we're aiming to do these once a month kind of thing. So
yes, I was talking about the dollar then and how I thought it was going to go higher, and it did sort of blow the lid off before now tanking after the UK announced it would turn the printer back on to buy long-dated bonds, which was a temporary fix, and it was an indication to the market at first that central banks were not sticking to their. They've been talking about tightening, and then, funnily enough, instead of tightening, which they were supposed to start doing in October, the Bank of England, they were instead printing more money. So that indicated to people that perhaps the Fed might do the same. But people are forgetting that the printer was turned back on to stop a crisis in the pension funds and the pension fund market as well.
What actually happened? What actually happened with the pension funds? Because that is one thing I've tried to figure out myself. Because pensions are obviously everyone's pension should be safe, but at the end of the day, it is an investment. Was it related to Credit Suisse as well and Deutsche Bank
So Credit Suisse is weak because they were very exposed to I'll tell you what, I think it's Evergrande. I think Evergrande, is that the name?
The Chinese housing.
It was a Chinese firm that basically blew up, and they were very well in with that, and they've been doing badly since, and effectively they lost a lot of money on that deal. So that's why they were already weak, and then they sort of got hit by a lot further, obviously, with the market and everything going down the drain as it has. So they were doing badly anyway. Deutsche Bank, like Credit Suisse, is a fairly new blow up. They've always been close to the line, in my experience, because I worked in wealth management, as you know, but there were certain banks that stepped into our arena. Most didn't, because it's like dealing with individuals is dangerous for banks, because there's too much red tape. They're giving advice. Therefore, if you're giving advice, you're liable. So not a lot of banks did it, but a few did. Barclays did it, and then it went terribly for them. They had to shut down their wealth management unit. Credit Suisse also did it. And then there was a few other banks that did it as well. Anyway, Credit Suisse was one of the few who actually we sold some of our higher risk products to, enterprise investment schemes and venture capital trusts, which are effectively private equity, but you get tax relief. So they're good for personal investors. But the reason I say I'm not surprised it's Credit Suisse is that they're one of the few banks that actually accepted the higher risk stuff that that it was my role at that time to sell. So yeah, that's quite interesting that it is them, because they might have carried some of that higher risk lending over anyway.
The stuff that you sold.
Well, that's not the stuff causing the problems, and technically it was to their wealth management unit. So it was a client who were taking that on. But what is more interesting is the fact that, you know, all banks will have the similar compliance department that monitors and approves whether stuff is allowed to be done. And if some of them say no to wealth management completely, then those that do say yes to wealth management obviously are a little bit leaner in what they allow. And then those who allow the highest risk of financial instruments obviously is a little bit more. So Credit Suisse were, you know, well-established bank. They have done very well in the past, but obviously as risk increases, then potentially so does reward as well. So they did well before. But yeah, I was looking at, let's see if I can share my screen. So it's like called the McClellan oscillator, which like measures different trends in the market. Let's see. Present screen. Okay.
I might need to change the setting if not. If it doesn't let you. Oh, there we go.
You see this?
Yeah, there you go. Yeah.
So this is like basically this, what just happened with this like 6% spike is like very, very similar pattern to here in 2020. So the idea is that this basically pulls back and then eventually just absolutely sinks. So that's what this is indicating anyway. But
why do you think this rally is like, obviously you're doing a bit of TA here, but aside from that, like, are there any other sort of like macro events that you think that this could be down to? Probably the war in Ukraine, obviously. COVID probably had something to do with it as well. What do you think?
Well, it depends how far back you want to go. It's pretty much been a whole roller coaster of just bad decisions, short-term bad decisions leading on to further bad decisions since like 2010, 2011. Modern monetary theory, MMT, the idea that you can just print money to get out of all of your problems. You can run governments in a deficit, budgets in a deficit, and just print money to fill the gap, print money to pay your debts, print debt to pay your debts.
So basically, just use more debt to pay your debt, so then you get more in debt. Yeah, it's not sustainable, is it?
Well, the thing is, it used to be sustainable, and that is the key difference. Because when you were in a low interest rate environment, debt was so cheap that, like, even if 2 years ago, 3 years ago, in fact, any time in the last 10 years up until the past 12 months, if I had 10 million quid in the bank, or $10 million, wherever you're listening from, and I was going to buy a house for 1.5 million, I would not pay in cash because it's not worth it to me. Because I could borrow that money for like between 1% and 2%, and I can put my money into something that yields me even 3%, and I'm making more money than I would do. So debt was so cheap to take on because that's what central banks had done. Since they're printing so much money, that money is then issued to banks. It needs to go out the door. So over the past 10 years, everybody's indebted themselves because debt is so cheap. Luckily, I fixed my mortgage for 5 years because they used to ask. They don't bother nowadays. I think we covered this in the last one. They used to check your affordability requirements.
Yeah. And they took that off.
Yeah, and so they said, are you aware of the risks of fixing your rate, that if interest rates go down, you could be worse off? I said they're not going down. They were like, it was like 0.5 at this point. And yeah.
So you got a sweet deal, considering.
Well, in fact, I looked the other day, and I locked my. So interest rates just hit 6% in the UK. I think they're above 7% in the US. But I thought to myself, I swear I locked my interest rates for 5 years. But the thing is, originally we were looking to buy a house ages ago, back before COVID hit. That went down the pan. Then we were looking to buy a house again last year, and then the buyer pulled out, and then I started vEmpire. So we thought, okay, we'll give it a rest for now. Moving house is stressful enough, let alone with a new business. So then luckily I had fixed my mortgage after calling them to get like approval for the extension. So I thought, I've done that for 5 years, I think. But now I'm trying to log in and see. Because,
we've got Liam here saying that some interest rates as high as 10% for the first-time buyers. Yeah, it's insane. I think I saw a question time, and for our American audience, question time is when different celebrities, politicians debate in front of a local crowd. And there was a lady from the local crowd, I think she's approximately our age, trying to get on the property ladder. And she, before this mini budget was announced, she got a deal that was, I think, 3 or 4% interest. And then literally the day after, they said, I'm really sorry, lenders have pulled. You're going to have to pay 8% interest, which was insane, from one day to the next.
I think a lot of people don't realize the effect, but it's crazy how much, compound VEMP is our catchphrase, and the reason why is that compound interest is so powerful. But that works the opposite way if you're the one paying the debt. Because if you are charging, there's different rates of compounding, and this is something to always check whenever you're getting any sort of interest charged to you, is what is the rate of compounding? Because if the rate is daily, which it almost always is with mortgages, then that will affect you, and you'll pay much more than if they were compounding weekly or any other monthly or anything like that. But yeah, here we go. Let's see what I've
what you've got. Whilst you look for that, I think an interesting, and this is probably a question that everyone's asking themselves, is obviously the worst is yet to come. How do like ordinary people like myself, like yourself, prepare for that? Like, do you put your savings into silver, gold? What do you do? How do you protect your value? How do you protect your net worth? Pay off any debt as soon as you can?
Not necessarily. Usually, I mean, it depends in what situation. Everyone's situation is unique. I mean, if you have debt, then it's weighing up how expensive is that debt. For example, I've just loaded that up. So my fixed rate until 31st of January 2026 is 1.83%. And that's because I got a 5-year deal when interest rates were at like 0.5%. Now, yeah, you can't get anything below 6%. So for me, again, like, I'm not going to pay off any of that debt. Why would I? It's like if I pay off 10% a year, for example, all I need to do is find somewhere to earn over 1.83%, and that's covered for me. In fact, what is the rate in, let's say that interest rates, the 2-year interest rate prediction by the market, the UK gilt market right now is like 4.2%. So I can buy 2-year UK government issued debt, which has never defaulted ever. Bloody looks like it could at some point, but historically it's never defaulted. It's never not returned the yield it's supposed to, or lost money. So, and that covers me. Like, I could invest half my mortgage value into those gilts that have never defaulted and never done anything, and that will cover my mortgage, like, well, forever if I maintain that rate, but for at least the next 4 years. So that's sort of how forward guidance and fixing can going 1.49 is up from renewal in March next year. I have savings to pay my mortgage off. Again, it's hard to say. I don't want to give financial advice because I used to be a regulated financial advisor, but I'm not anymore, so I can't give it officially. But it will be all down to your confidence in the market, really, and how much it is. If you have the savings to pay that off comfortably, then potentially, it might be wise to look at it. But if it's a stretch, and it also depends a lot, like, are you paying it off and looking to move again? Are you in your forever home? And you'll have to assess where mortgage rates are at the time. The good thing is that because of how much of a disaster, like, the current economic policy is that they will keep hiking rates, and then something will break, or it already has, and they'll tell us about it. And then they'll do the opposite and they'll cut it all the way back down. So March next year could be very different, because the thing is, banks use gilts, which is like the Federal Exchange has like a treasury bonds. We have gilts, same thing, but it's government issued debt. And they yield based on the forward looking interest rate. So 2-year, 5-year, 10-year, 30-year, there's different ones in between them as well, but they're the main ones. And they give you an indication of like where the market's going to be. So that's why people talk about the 2/10-year spread. The 2-10 spread is always talked about because it's successfully indicated recessions, like going back to forever. Basically, when the 2-year yield is higher than the 10-year, it indicates there's pain coming soon, because people are betting, or am I getting that the wrong way around? Either way, 2-10-year spread, when it flips into negative, that is when it indicates that there is short-term pain to come. But the quicker it comes, then the hiking cycle goes down. So as soon as we hit pivot point, some people are pretending it's now. I personally don't believe it is. Then the bonds start to come down, because rather than predicting inflation and the interest rates are going to go higher, they are predicting recession. Inflation goes lower, therefore interest rates go lower. And that's what the banks use to forward guide. They don't go from the current interest rate, they go from predicted future one as well.
But do you think, so March is 6 months time, do you think do you think that rates will go down in that time frame?
I think that the forward-looking ones will certainly drop. Yeah, I guess I mean, if you're going to be looking at moving again, it's either you're going to have to, I presume, borrow again at some point in order to move. It's just when do you envision that move? If it's immediate, then you're going to have to take on debt again anyway. If it's not immediate and you want to just live in your house for an extra little bit, then you can just sit on it. And in that case, if you're sitting where you are anyway, then you might as well pay it off, because there's no point sort of paying that high amount. But yeah, if you're going to move anyway and you envision that you're going to have to borrow in whatever environment it is, then, you know, is there much point if you're just going to take on more debt anyway? So yeah, it's very dependent on personal circumstance. But the good thing about houses, and occasionally you'll see this, I remember seeing it back in great financial crisis, like they were interviewing people on TV about property crisis, saying like, oh, it's really bad, our house has dropped from X amount to X amount. And then the fallback is, I mean, there's certain occasions where people like need to sell their house, but most of the time the fallback is like, you know, you could just live in it. That's what it's for. There's certain times where people have to sell their house, like, but on most of the occasions, it's more of a want than a need. So worst comes to worst, you know, no one's forcing anyone to sell their house. And if rates are still really, really high, because like the difference between 6% and like 2% is like double the cost. I mean, there's probably a interest rate like calculator,
yeah,
like Google that will say the difference.
If it was definitely me, I'd probably pay it at least a quite large percentage of it off, and yeah, just wait a little bit, wait a little bit for better rates.
Yeah, there's one here. Here we go. So let's go for like a 250k mortgage and 25 years repayment interest rate. Let's presume. Let's do mine. What was that? 1.83%. It's doing that really annoying thing where it wants me to
the cookies.
No, it wants to like email me it. Okay, so there we go. It has given it to me. So yeah, 1.83% interest rate on a mortgage debt of £250,000 over 25 years is 1,040 per month. Now, if you put that to like the 6% that you've got at the moment, like keep everything exactly the same, it's gone up by like 60% per month. So 1,611 rather than 1,060. So which means that the total amount you'll repay plus interest is 483. And then let's go put that back down, 483.
That's an insane amount though to be paying on a monthly basis.
There you go, yeah. So 483 was the amount with 6% total repayment with 1.83. My one total amount is 311,000. So you're paying an extra 170k in the difference just from having a 1.83% versus 6%.
That's quite a substantial amount for you know an ordinary person like us. So like, okay, so we're currently in Obviously, it has been announced that we're currently in a recession. Everything's not looking great.
Well, technically, they've actually redefined what a recession is. So we are in a historic recession, but now we're told it's something different.
Was that Biden that changed it?
Yeah, so technically it's for the US anyway. But suddenly the media isn't talking about recessions. I don't know. They're like saying like it's funny how they do it. Anyway, they're also redefining inflation at the end of this year as well. So that'll be
In the UK.
In the US again, like the way that they calculate it is going to be
different.
Yeah, which they do a lot, as in like it's already been recalculated once. Basically, anytime we go into an inflationary environment, they change the definitions of inflation to make it look better. But if you go by like the old definition, we're already like double the current CPI. But every time it gets bad, they just change the definition.
as a way to solve the problem.
Clown world, isn't it?
Jesus Christ! Oh God!
Well, this is where you the problems of you allow the current political system, any political system, is that nobody gives a shit past their term, which is why they're draining the strategic petroleum reserves in the US, because Biden needs to bring down inflation, but only until the midterms. After that, not his problem, because he's going to be, I mean, surely he cannot run again. I was watching a speech of him yesterday, and he was like trying to keep up with the teleprompter, and his wife looked so concerned about him. I was concerned about him.
Yeah, he's his body language is it just looks like he belongs in an old people's home, like not just his appearance, but just the way the way he acts, the way he goes about sentences. Like I saw a video of him trying to say something motivational, and he stuttered and just completely did not say what he was meant to say. It was insane.
There is so apparently, and he has always had some sort of stutter. That's what the excuse they've used anyway. But like, yeah, it certainly doesn't fill me with confidence. And then you got to wonder. I mean, it's in the two-party system of the US anyway. Like, you either a Republican or a Democrat wins. Like, and it's one person who goes through. Right?
Yeah,
and they're terrible. Always like they're never. It's like Liz Truss. Like I never heard of her before, but suddenly she's the prime minister. Same with like Barack Obama. Where the hell did he come from? Like these people pop out of nowhere because they're not selected by the people. They're selected by like banks, basically, and just propped up by donors.
I think this whole system doesn't work though, because like I was thinking about this the other day. Like here in the UK, for example, it like having two. I understand that having two parties is good because you get opposing sort of views and opposing opinions, and they should come together to form a more balanced set of decisions. But like I was thinking, everything that's happening in the UK right now with the Conservatives, it's very much in Labour's favour. As in, Labour are having a field day with all of this sort of thing. Because like when the next general election comes, which I think is in 2 years, right? 2 or 3 years.
God knows. I think the problem is they've redone them so many times that like the 4 years is like messed up. I have no idea nowadays.
Yeah, but it's just insane. Like it just doesn't work. And I believe it's the same in America. Obviously, all the stuff that's happening to the Democrats, it's going to work in the Republicans' favor in the long run, obviously, because when the elections come, Republicans are going to clearly win. So
well, that's what happens. It's like the Labour come in and spend tons of money, and then historically the Conservatives would come in and come in with austerity. But nowadays nobody bothers with any sort of logic. Everyone just prints money. Like even the Conservatives always run in a deficit. Theresa May was the last one who got the UK government into a surplus, and everyone hated her because of all of her austerity measures and all of her cuts. And so she got voted out. And ever since then, the Conservatives print just as much money as Labour. But yeah, I mean, Keir Starmer is like the biggest wet wipe ever. Like he is, I would prefer Corbyn. At least Corbyn actually stands for something. That is one thing that you got to give him. I'm not either party. I'm not like left wing or right wing. I just like it when they at least have an opinion and they actually hold themselves to it, and they don't just swing with like the wind, and they don't just try and like win votes from whichever way it goes. Like at least Jeremy Corbyn actually stood for something, whether it was good, bad, or whatever. You know, he believed in it and he would stand for it for like to the death. Like he wouldn't be pushed over by anything, which is why again he didn't stand for any of the anti-Semitism things the media were smearing him with. As in, he didn't accept the there's like a definition of anti-Semitism. There is different ones, but there is one that is put forward by the Holocaust Memorial Society, and he refused to basically define it as they would define it. And everyone's like, "Oh my God, you didn't." He must be like anti-Semitic because he didn't define it by the Holocaust's memorial thing. But in the Holocaust Memorial's definition of anti-Semitism, it is anti-Semitic to question the state of Israel, even though they are in the occupied West Bank. Not even the UK government recognizes the occupied territories. So basically, if you challenge Israel's legitimacy in Gaza, in the east of Jerusalem, then you are anti-Semitic. And so he refused to
accept that.
Well, accept it because he's always stood with Palestinians. And again, that's the thing. He didn't roll over. Most politicians, if they had the heat coming down on that, they would roll over. Like whether he's an anti-Semite or not. You know, I like politicians that have a stand and they stick to it. Because so many just roll over. And yeah, eventually, you know, if he is a racist or anything like that, or like anti-Semite, he will get voted out. But at least, you know, leave it to the people to decide rather than the media pushing him out based on that.
It's all a popularity contest, isn't it? It's all a popularity contest, which is insane. But yeah, we've got a question here from Liam saying, what does a worst case scenario, Great Depression, look like nowadays in your thoughts?
I mean, Great Depression was
it took 10 years to leave that, right?
Yeah, it took a long time, but the Great Depression, it's different. You have different like technological innovations since then. You also have like very different economy. You know, right now, for example, you have like shit tons of unprofitable tech, like just honestly like companies that should never have existed and couldn't ever exist in the old monetary system, are just propped up by the fact that they haven't made money for 10 years. But debt is so cheap that people can take on debt and then they take on more debt to refinance their debt. And it worked because the debt was so cheap that like you could last like 10 years and you would have got into like an extra 20% more interest than when you started 10 years ago. So it's a bit different now. So the Great Depression was caused by, funnily enough, like 10 years of the Fed. Well, the first sort of blow up, there was like a 1919/19 like 2021. There was like a mini little blow up, and there was a run on the banks basically. So people tried to take their money out, and then once like some people try and take money out, then other people see it and they worry, well, what if they take all their money out? I won't get mine. And it's a run on the banks. It's the same as like when Celsius had to gate, because if people go crazy and people think, oh no, they're going under, because of the fractional reserve banking system, which exists, banks only need to keep 10% of the money that they actually get So they constantly only have 10% of the money that they're supposed to, that they should technically have, which means that if 10% of people want their money back, then they've got no money left to give them, which means they have to then liquidate all of their assets, which obviously crashes the markets because they're redeeming everything to pay back depositors. So essentially that happened, which caused like a little bit of problem. So Fed does what it does best and increased the money supply, printed money for like the next like 10 years. Pretty much what we did since 2011. And they printed money and they kept on expanding the money supply. And then they had new types of like derivatives, basically. So leverage trading became a thing, broker call loans. And essentially, yeah, there was just everyone was chasing money because money was cheap. They were printing more of it. So it was creating a stock bubble. And so everybody started chasing the markets. And then when people started calling in the debt, it just like crashed the markets, annihilated the markets. Once again, everybody started like running to the bank, trying to take their money out. And then, yeah, eventually the US government called in the it was like the gold seizure. Basically, they said to everybody in the US,
give us your gold.
Give us your gold or you'll get 10 years in prison, but we will pay you back a certain amount for it. And so they like, the Fed basically took everybody's actual like wealth, because the dollar was worth nothing back then, because obviously it was backed by nothing and therefore it blew up. So they took everyone's gold and then backed the dollar with that, which is good, like as in that's like how it should be. But then they abolished the gold standard and started printing the money again. So, I mean, yeah, it's like, it's hard to say really. I mean, the exact same scenarios that caused Great Depression back then have like happened again, but it's just the, nowadays it's so much harder to enforce. Like people think like tax revenues, for example, like nobody really, if you can afford to have an accountant, you do not pay tax, basically. That is like the unwritten rule. If you have a lawyer or an accountant, then you will not pay tax because they'll find a way to make you not pay tax. The only people who pay tax are people who do not have lawyers and accountants, and those who pay it via a PAYE scheme. Anyone who actually is self-employed, and if they have a lawyer, then they won't be paying it, or they won't be paying and reflecting like, you know, the amount that's on the value. Yeah, I mean, you know, there's so many different ways to legally get around it, you know, whether that's contributing to a pension for tax relief, whether that's contributing to a VCT or an EIS, for example, what I spoke about earlier. There's like different ways that you can get around it, basically. So the fact is that we've been in an environment for so long where governments ran their economies on deficits. So tax revenue hasn't covered expenditure for 10 years plus, and it won't either. So then what do? You have to go into like authoritarian mode, which is what's happening in the US, where they've hired like 80,000 new IRS agents with guns. Tax agents need guns now. And that's almost certainly for the fact that they're going to be coming after it, which is why speculative assets are very likely to start being taxed like 50% plus on gains. Because the thing is, the shortfall is so massive. Like there's no tax revenues and everybody can escape it because it's all online now. So there's like so many different ways to get around it that's why they're going to have to.
Crypto's one of them.
Well, yeah, that's why I am bullish on crypto, gold, silver in like the midterm, in like, well, depends on your ideas of midterm, but in like the next like 3 months to 12 months, I'm super bullish on silver, Bitcoin, because they are going to start coming for anything that can be traced, and that means keep your physical gold with you, and Bitcoin, anything like that.
Yeah, I remember. I think it was 2 or 3 weeks ago. You mentioned. You said to get some gold. You said protect your assets, buy some physical gold, and yeah, and I think was it last week that we just started seeing the news. London, places in London have run out of gold, physical gold, that sort of thing. So
as always, I told everyone in my team to what was going to happen, and none of them listened to me, and then it happened.
Yeah,
No.
it's just because it's crazy. Like obviously the people from the vEmpire team, they've never, so we don't have the same background as you obviously, and as everyone else knows, and because we grew up in a like, considering our age, we didn't grow up in what's it called, like in an era where we had to sort of like worry about this sort of stuff. But no, yeah, like I think from now on, I'm just gonna, whatever Dom says, I'm gonna have to listen. But yeah, we've got another question from. What's that?
I say that every time. It's because often people mistake what I say for conspiracies, and then it happens, and it's no longer a conspiracy. But yeah, I think silver is inevitably down today because the market's down, and well, it was up like 9% yesterday, something stupid like that, because a dollar fell off a cliff, because we sort of peaked, the market rallied, everyone went nuts, and all of the, like, China basically is like, everybody is dumping the dollar. Governments are dumping the dollar. Any government that isn't the US is selling dollar-denominated assets. So that's US Treasury bonds, for example, like 2 years, 5 years, 10 years. China used to be the biggest holder of US government debt, but they've been selling it for about a decade now. And that is because the dollar is so strong and people need to pay the bills, and they don't want to print more of their own currencies because that devalues it. So short term, there's going to be some selling pressure on the dollar, which we already saw. However, once you've like got rid of all of the foreign currency reserves, of which the UK has like absolutely none, if anyone was studying the markets, they literally had the Bank of Japan like intervened, and they said, "Oh, we're buying yen with our US dollar reserves." So they actively sold dollar, bought yen. But the problem is, once you've shot your shot.
Shot yourself on the foot.
No. I mean, once you've had the chance and you've shot your last bullets and the ammunition's done. Once they've sold all their dollars, then what? Like, then they're going to have to do what they're doing. Like, it's prolonging like death, basically.
So, like, let's cover this question and then we'll go into my next point. So Sage says, does Fed gonna pivot to bail out during Credit Suisse, Deutsche Bank, and other major US banks collapse?
Well, there's
I guess this question,
pivoting and printing money. As in, a bailout is essentially that the Fed takes control. The Fed lends the money to the US government, and the US government takes control. The US government's already got $31 trillion worth of debt anyway. So, and obviously, just like how I showed you the interest rates on mortgages, the Fed is the one charging the interest to the US, and they set the federal exchange rate. So the US government is now paying like tons more. But yeah, I mean, they're not going to pivot necessarily. This is like the catch-22 that we're now in, is that inflation is still high because you've got two types of inflation: supply side, demand side. Demand side, you can absolutely destroy, and you can make everybody so poor that they can't afford anything. And that helps. That's why recessions basically cause deflation, or the lowering of the inflation rate, because nobody can afford anything. So people need to lower their prices because they need people to still spend money, and it just slowly trickles down. That actually works with trickle down. Yeah, essentially now they're in this situation where you've got supply side inflation. Like, how do you fix the fact that the United States, in my opinion, just blew up the Nord Stream 2 and 1 pipeline? Like, how do you counteract the fact that, you know, for the past 20 years, 30 years, 40 years, since the collapse of the Soviet Union, Germany and the rest of the EU has relied solely on Russian energy? You cannot fix that by raising interest rates. Like, it doesn't happen. Especially when you have Saudi Arabia and Russia and OPEC, basically OPEC, which is oil producing economic countries, but basically it is a cartel. It's a right cartel. They even state they're a cartel. They control the price of oil, so they keep lowering production because demand is being reduced, but there is still so much supply side. So they keep lowering the supply. In turn, with demand, the prices stay high, and that's what's happening basically. So you can't undo decades of reliance on Russian energy, and you can't undo decades of reliance on Chinese manufacturing overnight by raising interest rates. It doesn't happen. And that is like sticky inflation. Like, how do you get rid of that? And you can only get rid of that by having a workforce that will do the sort of cheap labor that they used to. And you can only get that cheap labor by like crashing an economy so badly that you can like rewrite all of the minimum wage stuff, like, and start, you know, treating your population like the way China treats it. So yeah, essentially that's the difference. And the problem is that when they do pivot, it's likely that something's already broken. The sooner they pivot, they're going to be printing money into a 10% inflationary environment. Like, there'll be a lag, of course, where it seems like it's dropping because it takes a while for it to show up, obviously. But eventually it's going to come back, and they are then yeah, look, here we go. Price cap may lead to temporary oil output cut in Russia. So again, that's good because Russia won't be making money, but it's extremely bad because there's going to be no Russian oil on the market, which means that prices will go up, which inevitably means that when Russia finds a new buyer, they'll be selling it even more, making even more money. Like, honestly, like, the decisions are just so dumb. Like, nobody has like any idea of like economic. It's like sometimes when you see these like it's like OHM, and all of these people, basically. OHM came out with like 1000% APR and pretended that they'd solved it so that like they'll automatically rebase and everyone would be fine and happy with these crazy interest rates. And again, it was just Ponzi-nomics. And it's like the government is like seeing OHM and it just wants to like, we can make it worse. We can do this like together.
hold my beer.
Well, yeah, it's just like so short-sighted of everyone. But yeah, essentially they're going to be doing the quantitative easing and everything that they said wouldn't be inflationary. Then it became inflationary, so it would be transitory inflation. And now obviously it's extremely bad. But then they're going to do all that into already super high. And the thing is, commodities are very, very, very low at the moment. Like, historically, the commodity versus the stock market is at like, it's way below the average. Like, there's hundreds of percent still to go to close a gap. And that can only happen by either the market's crashing to close that gap or commodities going up. And if they start printing money again, oil and agriculture and all commodities are inversely correlated to the dollar, which is why when the dollar was dropping like a stone, you had the 9% rise in silver yesterday. So if they start printing money again, the dollar's going to drop in value and commodities will go absolutely mental. And when they do, that's going to be reflected in everyone's gas, oil, fertilizer, food. Everything's going to go up. Inflation will go up immediately as well. So like, it's going to be, if they do it, and they will inevitably do it, it'll be so bad. It's like, just, that's why like there's people who want the pivot now are I mean, we'd all like them to print money again to, pump Bitcoin and thus everybody else's bags. That is good. But at the same time, if they do not absolutely destroy the market now, like properly destroy it, then they will have to destroy it in like 12 months' time. There's no way around it. It has to be destroyed in order for it to be rebuilt. It's just kicking the can down the road.
So you've mentioned this a few times about the market has been like destroyed. What exactly do you mean by destroyed? Like, is it just basically making everyone poor? So the quicker that happens, the quicker we can go back up, kind of thing.
Well, yeah, as in they need to crush inflation. And yeah, it's just a case of how quickly they can crush it. But mainly it's like they just, collapse like the whole financial system, like end modern monetary theory, end the monetary system as a whole and move and transition to something different. I mean, that's what the whole Great Reset is about by like Klaus Schwab and all of that lot. The 2030 plan was originally the 2050 plan, but they fast forwarded it after COVID. So essentially their plan is that they know what's coming, like as in like all of like the rich, powerful, the elites, they know that the current modern monetary theory is failing. That is what the Great Reset is about. It's what all of this is about. It is an inevitability. The only question marks are when and who takes over, which is why all of this, the massive geopolitical moves that you're seeing right now with US, China, with Russia, all of this is just geopolitical positioning for the inevitable collapse, as in somebody needs to and wants to put it back together, and everybody knows it's coming and everybody wants to take that priority position, which is why you've got Russia and China working together on like a rare minerals and like commodity backed currency. All of the nations that produce the food for the West that have historically, like, the West has been the banking and like GDP powerhouse due to its financial system, which has like powered the world. But because of that, they've outsourced all of their oil, all of their commodities, and so has Europe, to other countries. So now the other countries control the commodities and the US controls the money, but the money is Ponzi, as in that's the problem. So what they did have before, they are losing, which is control. And now they are printing money just to import the goods from other countries. So it's like, I think there is like there's a statistic basically, which I think it's the trade balance, that the trade balance of the US has risen in line with the money printed by the Federal Exchange. So essentially they outsourced everything and they are now printing money to buy it back from the import market. So yeah, and this question is it's not a stupid one, as in, because like it is, it seems stupid, but the modern monetary theory is stupid. Like finance is just a complicated, it's just an opaque sector that nobody knows how it works, because it doesn't work. It just has the illusion of working. And that is the thing about finance. It's not complicated once you get into it, because once you get into it, you realize that it's just a joke. Like it's not complex at all, because it's just once you realize that it is just corruption, like that's like unlocking the secret key. It's why you see on like Wall Street Bets on like Reddit, you see all these posts about like oh, we're going to take down Citadel, or we're going to take down all of these hedge funds, because if X happens, it will collapse, or X happens, which will lead to this and it will collapse. And everybody thinks that they're clever because they have figured out that the whole thing's a scam. And if they do certain things, they will collapse it and expose the scam. But everyone goes through that phase. I went through that phase of betting against the Fed and betting against the market, thinking I thought, as most people think, that the market is fair, and I thought that there weren't forces above like the control. But eventually you realize that all of the things that you think should happen, like the reason everyone was buying GameStop, because it means X will happen, which will cause this like crazy spike and send it all up to the moon. It doesn't happen because it's a rigged game. Like, the people do not win that game. They will stop you, and they will get away with it because it's not decentralized, and it's a few people at the top making sure that the game is rigged for their benefit. And that's why you cannot beat the current stock market, and that's why you cannot fight the Fed or fight central banks, which is why everybody suddenly thinks that they are clever buying into the market now. But the Fed is not pivoting. It has not said it will pivot. It says it will look at the data. The data is only getting worse. So when you fight the Fed, you lose, because the Federal Exchange controls the money, and whoever has the money has the power. And that's why chasing AMC and chasing GME and all of these was, it was fun while it lasted, but you will lose your money because the Fed will win. Like, you cannot beat the player. Like,
that should be that should be a soundbite. The Fed will win.
Yeah, I mean, and that's why it's this person said it might be, why can they print more money without consequences to pay debt, for example, but not more money in our pockets, but clearing UK debt? So the argument used to be that you could print money and you could give it to banks and you could lend it to people, and effectively the argument is that if you print money and give it directly to people, they will spend it, and that will cause inflation more because people are spending the money. So the old theory was you can print money to pay debts and it doesn't cause the same effect. But essentially, rather than giving it out directly, they are still giving it out, but they're giving it out to the banks, and the banks then lend it to other businesses, and the businesses pay it to people. So eventually it gets back into the system. But they were printing it as if, I don't know, as if they were printing it out of the window and it just disappeared. But in reality, it does cause inflation. But if you print money and give it directly to people, it causes inflation much, much quicker, because obviously it's like the stimulus checks. Like, people just stuck it straight back into stocks, into crypto, or furlough payments. Everyone was like, had so much savings because they weren't spending it on lunches, they weren't spending it on traveling. So essentially there is zero difference whatsoever, apart from the speed of the inflation that comes, and like just
it's still like supply that enters the market, or however you want to call it. It's still entering the market, just in a different way or in a different sort of speed, I guess.
Yeah, and they give it to people, not to peasants like us.
Yeah, I mean, just to end that on the depressive note, just a few updates from us, from vEmpire. We've got a new website coming live, hopefully by the end of this week, if not sometime next week. It will have a calculator on there, so you'll be able to see how much you can compound your VEMP for. What else? And yeah, last week obviously we had the metaverse party. It was a great success, and because of it was a great success, we're possibly looking into doing it on a regular basis. So yeah, I guess that is basically it. Unless you've got something else to say, Dom. All good?
Nothing that would make anyone happy. But
any alpha, anything you want to tease?
I mean, we have so much alpha, but yeah, it's the market is tough at the moment. But yeah, we've got so much on in the pipeline, like, that we're working on. We're busier than ever. Like, some of the stuff that we've got is like insane, that like, we can't even hint about it because it's so nuts. But yeah,
it's really it is crazy that it is like the current market that we're in, but we're just so busy with a bunch of stuff. But yeah, I'm just excited. I'm excited for what's to come. But yeah, on that note, everyone, please like, subscribe, share with your pals. And yeah, I guess Dom will see you on the next episode.
I shall. Right. Thanks, everybody. Thanks, Estefano. See you later.
Cheers.